voice audible?
Yes, sir.
Yes, sir.
How was your exam?
Nice, sir.
Easy, tough?
Little bit stuff, sir.
Preparation all went well? So preparation all went well for your exam? Anyone faced any difficulty in the preparation part? So still how many people I need to join? Hello? Hello? 7%.
16 members should join.
So we'll start. Let them join. We'll start now. So before going into the explanation part, just let me know what are the questions you felt difficult one by one. So first we'll deal with those questions and then we'll go with the other questions. So let me know what questions you found difficult in your exam so that we'll discuss them first and then go with the other questions next. 11th question next. sir. First, I'll talk with the 11th question. Then I will have identified few questions where you need to focus on. We'll discuss those, and then we'll close the remaining questions. Sir, first 11th question. Sir, in this 11th question, what they're asking, sir? Here they're asking the cause of hyperinflation. They're asking the cause of hyperinflation. Sir, what do you mean by hyperinflation? The hyperinflation means it is nothing but a rapid and uncontrollable growth in money supply, sir. When there is rapid and uncontrolled growth in money supply, it will automatically lead to very high and typical accelerating in the inflation rates. This is nothing but hyperinflation. This scenario is what we call as hyperinflation. Now in these options, if you see what now here what they are saying, the first one excess growth in money supply, second one low aggregate demand, third one high saving rates, fourth one appreciation of currency. Now tell me, sir, as per the definition of hyperinflation, what is the correct answer?
Sir, option A.
Option A, correct. You understood this question? Okay. So I have identified few questions, sir. Let me share my screen. Sir, I've identified few questions for you where you might find difficulty. So out of which first question is regarding countervailing duties. Sir, here in the question, what are they asking, sir? They are asking the countervailing duties are used to offset. Sir, for you need first you to in order to answer this question, you need to understand what are countervailing duties. Sir, in sir in international trade chapter we have learned there are many types of tariffs. Under that, one of the we have learned many types of tariffs, sir. Under that, one is countervailing duty. Sir, countervailing duty means here these are the tariffs that are used against imports that have been benefited from exports of export incentives provided by the foreign governments. Means some foreign government is providing some incentives, sir. Foreign government is providing some incentives to export their products of to their companies. Automatically, what will happen? The price of the goods in the foreign company, the people who are exporting, the price of those goods will fall, will reduce automatically. In home country, what will happen, sir? When you are importing it, when you are exporting it to the other country, your exporting price is low. Automatically, what will happen? Cost of your product in the exported imported currency will imported country will also be low. So what will happen, sir? There will be unfair advantage in the importing country. That is nothing but then what will happen, sir? Automatically there will be disadvantages. There will be disadvantages. There is threat to the there is threat to the domestic market. So what government will do? They will impose this countervailing duty to tackle those kind of activities. Now we'll see the options, sir. Now what are the options? They're saying trade deficits. Second one, option B is export subsidies provided by the foreign governments. Option C, currency fluctuations. Option D, inflation differentials. Sir, option A, they're talking about trade deficits. First of all, let me say, tariffs are used to promote imports or to reduce imports. Sir, unmute your mic and let me know the answer, sir. answer. Tariffs are imposed to reduce imports or to promote imports.
Sir, reduce imports.
Reduce the imports. Now, sir, trade deficits generally happen when sir, trade deficit means imports are more than imports are more than exports. Then we'll call it as
Exports.
trade deficit. Now, sir, now see, we'll use now countervailing duties, sir. Countervailing duties, exactly what will it do, sir? It will be used to counter the export subsidies provided by the foreign governments. Export subsidies provided by the foreign governments. Sir, currency fluctuations. Sir, currency fluctuation is not there is no tariff that is dealing with the currency fluctuations. Sir, currency fluctuations and all depends upon the. It will be taken care by the RBI. Now, inflation differential, sir. Inflation is also one of your fiscal concept. We will not cover it here. Now, tariffs we will use for what, sir? We will use tariffs for countering the export subsidies provided by the foreign governments. Understood this question? Sir, understood this question?
Yes, sir. Yes, sir.
Next one. Next one, sir. Your question number 13. Sir, here the Hindu growth rate refers to. Sir, here, sir, if you remember where we have discussed, sir, this one, in which chapter we have discussed this one? Sir, if you remember, in our Indian economy last chapter, sir, there we have seen, there we have, when we are learning about India after post independence, the growth of India, we have learned there are few there are phases where we have learned the. Hello, is my voice audible?
Yes, sir.
Sir, the Hindu growth rate, where we have learned, sir, we have learned this in our Indian economy last chapter, sir. where we have learned, sir, while we are referring to the Indian economy, while we are discussing about the Indian economy growth after post-independence, there we have learned that during the 1950s, sir, during the 1950s to 1980s, the economic growth rate of the India was around 3.5 percentage. It was the slowest growth rate of the Indian economy. So they use the term called Hindu growth rate to describe that, sir. That is why they say that it is the slow that is during that period there was a slow growth in the economy during that socialist planning era. So to show that, in order to tell you that it is the slowest economic growth, they use the term called Hindu growth rate. So what is the correct option? Low average growth rate of 3.5% from 1950s to 1980s. This is what Hindu growth rate refers to. Important, sir, this one. Understood? Can I continue to the next one?
Yes, sir.
Sir, next one, the hexadohylin theorem explains trade based on. Sir, this one, which chapter, sir?
Sir, international trade.
International trade. Sir, how we have learned there are various theories we have learned, sir. What are the theories we have learned there? Mercantile view of theory of trade, theory of absolute advantage, theory of comparative advantage, and hexadohylin theory of trade. And last one, modern trade theory. Sir, now here, sir, in hexadohylin theory, what we have learned, sir, there?
Sir, cost of production.
Cost of cost of
Production.
production. Sir, in theory of comparative advantage, what we have learned, theory of comparative advantage, we have learned that which country is having the comparatively more advantage. Even though, sir, international trade will happen even though both one country is having an advantage in both the scenarios, both the goods. Then automatically, even though the single country has more advantage in both the goods, even but the countries will still participate in the international trade because of the comparative advantage factor. That is what we have learned in theory of comparative advantage. In explaining to that, what Hexer and Oilen they both told, sir, they told that this difference, this comparative advantage, that might be due to several factors, but the key factors are the factors of endowments, factors of your production, nothing but your capital and labor. So which country is rich in, like which country has having absolute advantage in capital, it will produce the capital intensive goods, and which country has advantage in labor, it will produce the labor intensive goods. So here what they are saying, sir, in their theory, it states that country exports goods that use their abundant factors. Based on the availability of factor in their country, the two countries will enter into the trade between each other. That is what we have discussed in hexadohylin theory. Now here come to options, sir. Now here what in the options what they have given, sir, climate and geography only. This is not correct. Factor endowments. Okay, next one, third one, government policies. No, we have not considered this. Next one, last one, historical relationship between the countries. Now tell me, sir, what is the correct option?
Sir, option B.
Option B. Correct. Next one, sir. Sir, no, next one, sir. Fiscal deficit is calculated as, what is the formula, sir? Fiscal deficit means Sir, fiscal deficit means the shortfall between the total government expenditure and total non-borrowing receipts. Sir, revenue minus expenditure minus revenue. Sir, if revenue minus expenditure, if expenditure is greater than revenue, then automatically it is called deficit. Now, here what are they saying, sir? Here, revenue expenditure minus revenue receipts, total expenditure minus total receipts excluding borrowings, capital expenditure minus capital receipts, and tax revenue minus government spending. Sir, if you see in first option what they are considering, sir, here they are considering only revenue expenditure and revenue receipt. This is revenue expenditure minus revenue receipt. This is nothing but your revenue deficit. Here total next one, sir, here come to option C, sir. Here they are using capital expenditure minus capital receipts. Here it is capital deficit. Now here, sir, tax revenue minus government spending. Sir, revenue does not only include tax revenue but also other forms of revenue and government spending. Not only government spending, sir, it also includes some other expenses, other spending also, sir, expenditure. So next, come to option B, sir. Now here what is saying? Total expenditure minus total receipts excluding borrowings. Now tell me, sir, which is correct?
Sir, total expenditure minus total receipt.
Total expenditure minus total receipts excluding borrowings. So next one in 27th question, most favored nation status. Sir, MFN. This is also one kind of tariff, sir. Most favored nation. This is also we have learned in the international trade chapter. Sir, in this most favored nations, what will happen, sir? Sir, what does this most favored nation tariff mean? Sir, most favored nation tariff means that when this country, sir, countries countries who have signed up in the signed up in the WTO, what they'll do, sir, they'll have some preferential rates, sir. Like they will agree that they will only apply this rate to the while they are doing the imports. They apply only this much of rate. That is nothing but there is some special status given, sir. Any advantage given among the any advantage given to the one WTO member, it extends to all the WTO members. This is nothing but your most favored nation tariff. So in options, what they have given, sir? Trade between given trade benefits given to one country must be extended to all WTO members. One country receives special privileges. Tariff increase for most of countries. Only bilateral trade agreements are allowed. Sir, here, sir, if you see in option B, only one countries are receiving these special privileges. Means what the, sir, here it is wrong, sir. Here they are only talking about the one country, so it is wrong. Now come to option C, sir. Tariffs increase for most countries, sir. The main objective of people entering into WTO is to reduce the tariffs and promote the international trade. But here what they are saying, sir, they are saying we are increasing the tariffs for most countries. Is this correct? No. Next one, only bilateral trade agreements are allowed. Sir, this is entirely out of syllabus option, sir. Out of topic option. So you should not take this. Here they are talking about the bilateral trade agreements. But here, sir, MFN is concerned about the trade agreement commonly in between all the WTO members. So option D is wrong. So what is your correct answer? It is option A. Understood? Understood?
Yes, sir.
The next 28th question. NNI, net national income. Sir, they are asking the for general formula, sir. NNI formula. What is the NNI formula? Net national income.
Sir, GDP plus depreciation minus NFIA.
Sir, tell your sir. Think carefully, sir. You are adding depreciation. In order to convert gross to net, what we need to do? We need to reduce the depreciation. GDP minus depreciation. Next, domestic to national. How we will convert, sir? By adding the NFIA. So GDP minus depreciation plus NFIA is equal to NNI. understood? Sir, understood? Any doubts? Sir, any doubts?
No, sir.
Sir, next one, sir. 49th question. This is also a bit tricky, sir. Sir, here what the here this is nothing but you need to remember this formula, sir. Money multiplier. Money multiplier. Sir, what is this money multiplier? Sir, money multiplier. What is this money multiplier? What do you mean by money multiplier? Sir, money multiplier means, for example, let us say if the government has invested 1 rupee into the circular flow, let us say into the agricultural sector, by coming to the service sector, how much it is becoming, or there is any injection by the government, if a certain point of money is injected into the economy by the government, how much it is finally becoming. For example, let us say it has invested, government has induced 2 rupees, at a final stage it became 10 rupees. Now how much times it has increased? 5 times. That is nothing but your money multiplier. It shows how the monetary base expands to create the total money supply, explaining the fractional reserve of the system. Sir, how will you calculate total money supply with respect to the base money, high powered money? High powered money is nothing but your monetary base. Option A is your correct answer. Sir, understood? Sir, understood? Can I continue?
Yes, sir.
The next one, 50, come to 54th, your 54th question. What they're asking, sir, in two sector economy, aggregate demand equals to, sir, in this now they are coming to Keynesian theory of income, sir. Now they are talking about the two sector model, sir. In two sector model, how many who all will be there, sir? Only consumers and only households and firms. There will be no government. So aggregate demand is equal to consumption and, sir, aggregate demand, consumption plus investment, C plus I, because there is no government, sir. There is no government, so there will be no nothing called taxes or foreign trade, exports and imports. There will be no point of exports and imports here. So your aggregate demand will be equal to your total consumption and your total investment. Next one, sir, personal disposable income. Sir, personal disposable income is calculated as, they are asking you the formula, sir. How to calculate personal disposable income? So generally, how will you calculate the disposable income? Okay, sir. I'll explain you in easier way. Sir, if you to calculate this, what you need to understand is first what do you mean by income? Sir, income means whatever the amount you are totally you are receiving. That is your income. Now, disposable income means whatever is left to spend with you. Now, if you reduce the taxes, that is nothing but your disposable income. Now here they are asking personal disposable income. So personal disposable income means you need to reduce all the direct taxes plus transfer payments, or reduce all the direct taxes plus transfer payments. So that is nothing but your personal disposable income. Sir, income, everything, sir, everything what you earn is your income. Now you need to calculate the disposable income. Disposable income means what is left with you. Now how will you do, sir? Disposable income, how will you calculate disposable income? Total personal income minus personal income taxes minus non-payment of non-tax payments. If you reduce this, you will get the disposable income. Next one, sir, primary deficit. Sir, primary deficit means
Sir, physical deficit minus interest payment.
fiscal deficit minus interest payments. What are the types of deficit we have? Sir, we have three types of deficit, sir. Revenue deficit, fiscal deficit, and primary deficit. Revenue deficit means when revenue expenditure is greater than total revenue receipts. This is called your revenue deficit. And fiscal deficit, sir. Fiscal deficit means total. This is a comprehensive measure, sir. When will fiscal deficit will come? Will be there, sir. When total borrowings means it is calculated as total expenditure minus total receipts excluding the borrowings. Now this one, sir, effective revenue deficits. This primary deficit, sir, this primary deficit is nothing but the total, it represents the total government's borrowings requirement excluding the interest payments on past loans. So how will you calculate this, sir? Primary deficit is nothing but your fiscal deficit minus interest payments. Understood? Can I continue to the next question? Sir, can I continue to the next question?
Sir, explain 1 second.
Sir, we have basically we have three types of deficits, sir. Revenue deficit, fiscal deficit, and primary deficit. So revenue deficit means when revenue expenditure is greater than revenue receipts. This is called revenue deficit. Means what are the day-to-day activities, what are the costs they are incurring, and what are the amount they are earning in the day-to-day operations. It is nothing but your revenue part. So if the revenue expenditure is greater than revenue receipts, it is called revenue deficit. Now there is one more thing called fiscal deficit. Fiscal deficit means it is a it is a broad measure, sir. It is a broad measure, sir. In fiscal deficit, how we will calculate? How we will calculate now total expenditure minus total revenue. Total expenditure minus total revenue. Include excluding the borrowings. Excluding the borrowings means here we are calculating what are the what are the government needs to borrow to support its activities. We are excluding that is why we are excluding the borrowings part there. Now come to your primary deficit. Primary deficit, here what we will do is we will reduce the interest payments from the fiscal deficit part. Means here, sir, you means what are the current net borrowings. Means previously we will also have taken some loans in the last year. Am I right? Hello.
Yes, sir.
So take now current now in current year also we need to take some loans. So we'll reduce what are the interest payments we have made on the past loans. So it will give us the net. It will give us the net figure, sir. Net additional borrowings requirement. That is called nothing but your primary deficit. Understood?
Yes, sir.
Next one, sir. Here they have given MPC is equal to 0.8, the value of income multiplier. Now, how, sir, we have learned one relation, sir. What is the relationship between MPC and MPS? Sir, MPC and MPS, what is the relation? Sir, relation is MPC plus MPS is equal to 1. Always MPC plus MPS is equal to 1. So now what they're asking, sir, they're asking you to calculate income multiplier, sir. They are asking you to calculate income multiplier. Sir, income multiplier formula 1 by 1 minus MPC. Sir, now they have given 1 by 1 MPC is equal to 0.8. Substitute the value there, sir. You'll get the answer. This is just a computation part, sir. You need to understand you need to understand the relation, sir. Income multiplier formula 1 by MPS. MPS is nothing but 1 by 1. MPS is nothing but 1 minus MPC. MPC, if you substitute, you'll get the income multiplier. Now we'll go in order of your question paper, sir. You will understand each question. Sir, now first question, sir. Expansionary monetary policy. Sir, expansionary monetary policy means what they are trying to do, sir? Sir, in expansionary monetary policy, what they are trying to do? Sir, respond. Sir, when will you use expansionary monetary policy?
Sir, in recession time.
In
Recession.
decision phase. Sir, in decision phase, what the government is trying to do, they are trying to increase the demand. They are trying to increase the demand, sir. To increase the demand, what we need to have, sir, we need to have some income to spend on. So how income to spend on, if we income is like, if we, the consumer need to have some income, means what they're talking about, sir, they're talking about the money supply in the economy. Sir, if in order to increase the money supply in the economy, what they need to do, sir, they need to increase the interest rates, sir, decrease the interest rates, sir. Sir, in order to increase the money supply in the economy, they need to increase the interest rates or decrease the interest rates.
Sir, decrease.
They need to decrease the interest rate. and they need to they need to increase it. Now what it also we need to decrease the interest rates. Sir, if we increase the interest rates, what will happen? If we increase the interest rates, automatically what will happen, sir? The cost of loans, cost of borrowing increases automatically. They will not take loans and there will be no employment, and further the amount what is with the people, they'll be the supply, they'll be depositing with the banks, and then automatically the supply in the economy, the supply of money in the economy will be reduced. So now in your options, what is the correct answer? It is option C, decreasing policy rate and increasing money supply. So I understood the first question. How to answer your first question? Next one, sir, transmission mechanism of monetary policy. Sir, here transmission mechanism, sir. What we are asking is, sir, monetary policy, it always impacts economy through changes in interest. Or the main thing, the interest rates are the main thing that monetary main key instrument in the monetary policy, sir. It influences the investment, total investment, consumption, aggregate demand, and everything, sir. So if the central bank wants to increase the money supply, what they'll do, they will reduce the interest rates. And if they want to increase the if they want to sorry sir, if they want to reduce the money supply, what they'll do, they'll increase the interest rate. If they want to increase the money supply, they will reduce the interest rate. So now in question, what they are asking, the transmission of the transmission mechanism of monetary policy works through. Here what they have said, sir, they have given direct taxation only. Now here what that option B is, changes in money supply affecting interest rate and investment. Option C, controlling prices directly. Option D, regulating imports and exports. Sir, regulating imports and exports, this is not part of your monetary policy, sir. Next, controlling prices directly, it is also not part of your monetary policy. Sir, monetary policy, dealing with money, anything which is dealing with money, it is monetary policy, sir. Now here if you see, only option B is relating to that, so option B is your correct answer. Next one, sir, capital flight occurs when? Sir, capital flight means, sir, capital flight means a large and sudden movement of financial assets out of a country. Sir, why this happens? Generally, sir, if there is any political or economic instability, automatically what will automatically the investors who are coming into our country and investing, they'll go out of our country, sir. So that is nothing but your capital flight. And not only foreign people, sir, our domestic people also will not invest in our country, they will also move to abroad. So automatically the capital that actually need to be invested in our country is moving to other country. That is nothing but your capital flight. Now in options, sir, they are given, okay, domestic investors invest abroad due to economic instability, foreign investors bring money into the country. Sir, if foreign investors are bringing money into the country, then it is called foreign direct investments, or it can also be called as foreign portfolio investment, depending upon the percentage of investment in the company. Next one, government increasing capital expenditure. No, it is capital expenditure by the government. No, bank reduce lending. This is also wrong, sir. So option A is your correct answer. Understood? Next one, sir, liquidity adjustment facility. Sir, liquidity adjustment facility means it is a tool used by the RBI to help bank adjust their day-to-day liquidity mismatches. Sir, what are based on what they how they you operate this, sir? Based on repo rate and reverse repo rate, both repo rate and reverse repo rates. Sir, repo rate means, what do you mean by repo rate? Sir, repo rate means the rate at which bank borrows from the RBI. Reverse repo rate means the rate at which RBI borrows from the bank. Repo rate means banks are borrowing from RBI. Reverse repo rate means RBI is borrowing from the banks. By using this both of these things, they will adjust the liquidity, sir. That is why. So option C is your correct answer. Sir, next one. India's economic growth model post 1991 is characterized by. Sir, post 1991. How what happened, sir, in 1991?
Sir, shift from agriculture.
Shift from agriculture to service sector. Sir, initially we started concentrating on agriculture during our first 5 year plan. Later, after it was not successful, then we started. We also tried to implement some. We have also prepared 5 year plan during the industry revolution. But later those 5 year plans were not successful. And later after 1991, after the introduction of LPG policy, due to globalization, there was a heavy shift from agriculture sector to service sector, that is like which has a major boom in that, bypassing the manufacturing sector. Option B is your correct answer. Sixth question we have already discussed, sir. Next one. Asymmetric information in a market leads to. Sir, asymmetric information means.
Sir, buyer knows the more than seller. Seller knows the more than the buyer.
Either of the parties having the opportunity, more or better information than the other, then that is called asymmetric information. So automatically what will happen, sir, it will lead to adverse selection. If one party in the transaction is not having proper knowledge of the product what they are dealing with or service what they are dealing with, automatically the other party will try to take the advantage of it. So there will be always adverse selection and it will lead to market failure. Adverse selection and market failure. Next one. According to Musgrave's classification, which function of government aims at achieving full employment and price stability? Sir, what they are talking, sir, here? Employment and price stability. Sir, what are the functions Musgrave told? What are the what are the functions, sir?
Sir, allocation function, distribution function, stabilization.
Allocation function, distribution function, and stabilization function. Sir, allocation function deals with the allocation of resources. Distribution function deals with the distribution of income. Stabilization function deals with the price stability and employment. Now what they are asking, sir, here, they are in question, they are also asking about the full employment and price stability. So what is your answer? It is nothing but your stabilization function. Sir, next question. The free rider problem arises in case of. Sir, free rider problem means. Sir, free rider problem means one person is enjoying the benefits without paying anything, sir. When this generally occurs in case of non-excludable public goods. Example, sir, street lights, your national defense, etc. These are examples of your non-excludable public goods. Means here people are enjoying without paying the benefits, sir. Sir, are you paying anything for your street lighting, sir?
No, sir.
Means here we are people are enjoying the benefits without paying anything for them. So this leads to automatically under supply. If you are not receiving any amount for the services what you are providing, will will the private people will come and produce those goods?
No, sir.
Because the main aim of the private people is to earn profits. Since they are unable to sell it or unable to make some amount out of it, they'll not have interest to produce such goods. So automatically what will happen, the government need to enter into in such cases and provide the necessary things. Now in questions, what now in now come back to the question, sir. Now what they are saying, free rider problem arises. Now when this will arise, sir, when it is when the such goods are public goods and also non excludable. So option option A is your correct answer. So free rider problem exists when the goods are public goods and are non-excludable in nature. 10th question, sir. WTO. Sir, what is the main aim of WTO? To promote free and fair trade among the members. Am I right?
Yes, sir.
Next, it settles the trade disputes. Am I correct? It has a dispute resolution system, sir.
Yes, sir.
Next one, ensure non-discriminatory treatment. Ensure non-discriminatory treatment in trade. Sir, promoting free and fair trade means here it needs to ensure non-discriminatory treatment in trade. Am I correct? So these are all the aims of the WTO. So option D is your correct answer. Next one, sir, tariff rate quotas. Sir, what they are asking, sir, tariff rate quotas combines of. Sir, tariff rate sir, here if you see the name only suggests that tariffs and quotas. Sir, what are these tariff rate quotas? The tariff rate quotas means we are allowing only a certain quantity of imports to enter at a lower tariff rate, sir. If the if it goes beyond that rate, a higher tax rate will be higher tariff will be applied. So here what we are using, both tariff we are using and quota. We are imposing a certain quantity restriction. It is nothing but your quota, and we are using the tax, which is nothing but your tariff. So it is a combination of both tariff and quota. Option C is your correct answer.
Yes, sir.
13 we have already discussed. Sir, government budget is primarily used for. Sir, option A. What they are saying, sir, regulating only monetary policy. No. Sir, the government budget includes all the revenue, all the expenditure. They'll be going to take some decisions, like fiscal decisions will also be based on that. So it is not correct, sir. It is only talking about monetary policy. So this is not correct. Next, option C, collecting revenue only, false. Reducing inflation rate only, sir. The main aim, it is not only the inflation, sir. We need to tackle other areas also. So this is also wrong. So option B is your correct answer. Allocating resources, redistributing income, and stabilizing the economy.
Yes, sir.
Option B is your correct answer. 15 we have discussed. Next one, Make in India initiative aims at. Sir, Make in India. Sir, Make in India program, it is launched in 2014, sir. The main aim of this initiative is to transform India into a global manufacturing hub. So means the generally the Make in India campaign has been initiated by the government just to increase the like self-reliant, sir, to make India self-reliant on production. So what they wanted to do is they wanted the people come to India and manufacturing in the India itself instead of importing them. So now what is the option A, sir? Option A, they are saying about restrict foreign companies from operating in India. No, the main aim is to attract the foreign investments. False. Next, promote manufacturing and attract investment. Okay. Next, option C, reduce imports completely. False. Next, option D, encourage only small scale industries. Sir, it is not only a small scale industry, sir. So option B is more relevant here. Option B is your answer. Next one, sir, 17, welfare economics is concerned with. Sir, welfare economics is concerned with. Well, sir, welfare economics means. Sir, welfare economic means. welfare economic means, sir, it deals with the how well an economy should be functioning in terms of social well-being and is concerned with the optimal allocation of resources. It is also called as normative economics, sir. Now here come to your options. What they are saying, it is an only individual happiness, false. Next one, option C, government welfare schemes only, false. It deals with the overall economic activities, sir. Next one, option D, poverty reduction alone, false. It deals with option A, sir, optimum allocation of resources to maximize the societal well-being. That is your answer.
Yes, sir.
Sir, next one, GST, goods and service taxes. So GST means it is a direct tax and indirect tax, sir.
Sir, indirect tax.
Indirect tax.
Single indirect tax. Sir, many taxes were subsumed under GST. So option A, they are saying it is a direct tax on personal income. It is a direct tax on personal income. False. It is not a direct. It is not a direct tax. Option B. Option B, a single indirect tax. Okay. Option C, it is a custom duty on imports. False. Option D, it is a tax on agricultural income. Sir, India agricultural income is not taxable. So option D is also false. What is the correct answer, sir?
Option
Option
B.
B.
Yes.
Next question, sir. A quantitative theory of money. Sir, what is quantitative theory of money? What does it state, sir? Sir, quantitative theory of money explains the relationship between money supply, velocity of circulation, price level, and output in the economy. Sir, how will we calculate, sir? In this, what is it? How will we evaluate or how will we represent it? Money supply into velocity is equal to price into quantity. That is how you will explain the relation, sir. In the quantity theory of money, option A is your correct answer. Next one, sir. Service sector in India is characterized by what? Option A, sir. Low productivity and slow growth. Low productivity and slow growth. True, sir. True or false?
Sir, false.
False. Next one, high productivity and faster growth, high unemployment, false. Because next, declining share in GVA, false. Sir, here service sector, sir, it is the high productivity growth and is fastest growing sector, sir. It contributes around almost more than 50 percentage of our gross value added. It is the share in gross value added is always, it is not declining, sir. It is increasing. So option B is your correct answer. Understood? Sir, next one, sir. Pigovian tax.
Yes.
A Pigovian tax is imposed on. Sir, what do you mean by Pigovian tax? First, where will use Pigovian tax? Sir, while we are learning, we learned about external costs, something called as external cost or social cost. Generally, in accounting, we will not consider this cost, sir. AC Pigo, what he told that to improve, to tax on those external externalities. What are the externalities that are being caused? You tax them, and then so that that amount, what, so that the costs are also will be considered in the actual cost incurred. That is nothing but such tax, whatever the tax we are imposing on externalities to internalize them. That is nothing but your Pigovian tax. Now, Pigovian tax, what they are getting, sir? Generate government revenue. False. The main aim is to internalize the negative externalities. Next, what they are saying, sir? Reduce the government expenditure. False. Sir, it might be reducing the government expenditure to some extent, sir, but this is not correct. The main aim is to internalize the negative externalities and promote consumption of demerit goods. False. So option B is your correct answer. Next one, sir. Keynesian theory of demand for money emphasizes. Sir, what are the as per Keynes, what are the three motives of holding the money?
Sir, transaction special speculative.
And
The
precautionary. These are the three key motives that determines the demand for the money. Now here what they are saying, sir, option A only transaction motive, false. Option C only speculative motive, false. Only income motive. These three are they are only talking about only one factor. But the Keynesian theory of demand states that demand for money not only depends upon the transaction motive but also precautionary motive and speculative motives. So option B is your correct answer. Fiscal deficit 23 we have already considered covered it. Next one set 24. The opportunity cost concept explains. Opportunity cost means cost of next best alternative foregone. Option B. Next one set. Which of the following is an example of positive externality? Sir, positive externality means. Sir, externality might be two types, positive and
sir,
negative. Negative means outsider is facing some adverse effect. A positive means outsider is facing some positive benefit. Outsider is getting some benefit. Now, what is some now here, sir? Smoking in public places. So if someone is smoking in public places, not only that person will be affected, the other persons will also be affected. So other person is having positive externality and negative externality. Yeah.
negative externality.
Negative
Negative
externality.
externality. Next one, pollution from factories. Sir, here pollution from factories. Now, if the pollution is increasing, the people around the factory will be affected as positively affected or negatively affected.
Negative, sir.
Negative.
Negatively affected. Next, noise from industries. Sir, noise from industries, other people will be getting disturbed or will be feeling happy, sir.
Disturb, sir.
Disturb
This is
service.
also your negative externality. Next, education and vaccination. Sir, if you have some education and if you have the education, sir, automatically your standard of living increases. If your standard of living increases, you will also help the other people surrounding you to increase the standard of living. And coming to vaccination, if you are taking vaccination, example, your COVID vaccination, you are what, sir, you are contributing to prevention of spread of COVID. So means by taking yourself a vaccine, you are the other party is getting benefited of stopping the spreading of your coronavirus. So they are getting positively benefited. So what is your correct answer, sir? Option C.
C.
Next one, sir. Which of the following is included in calculator of GDP at market prices? Sir, how generally GDP at market price means? How will you calculate, sir, GDP at market price?
Final goods.
Value of market value of all final goods and services. You should not take intermediate goods, sir. We will take only value of final goods. Sir, why, sir? If we include intermediate goods, their value will be reflecting in final goods also. So automatically it will give you a doubling effect. So we will ignore the intermediate goods and consider only the final goods final value. Next one, sir, MFN we have already covered. NNI we have already covered. Revenue deficit we have already covered. Sir, here come to this 30th question, sir. FPI versus FDI. Sir, FPI means foreign portfolio investment. FDI means foreign direct investment. Sir, FPI, FDI. Sir, the main difference is like the nature of investment, sir. Nature of investment, sir. FPIs generally invest to get some profit only for the short period of time. FDI, sir, when the investment is of long term nature or greater than 10% of the equity, greater than 10%, and they are having some interest in the company and they are willing to continue in long term, then it is called FDI. Now come to here, sir. FPI involves management control of enterprises. Sir, they are investing, sir, but not at that much level. So there will be a little bit of management control, sir, but it is not considered, sir. They are not considered about the management control of enterprises. They are not considered about the control, sir. They are only concerned about the profit. Next one, sir. FPI is more stable than FDI. True or false?
False, sir.
False. They are only trying to get some profit out of that investment, sir. Only for short term. And FPI involves production activities. False. So option B is your correct answer. The FPI is typically short term and involves stocks and bonds. Sir, international trade versus internal trade, sir. International trade means outside the country, between the countries, outside the border. Internal trade means being inside the country, sir. Domestic. So what they are asking, option A, sir, transactions in multiple currencies and different legal systems. Yes, international trade involves transaction is in multiple currencies and different legal system. Next, only exchange of final goods. False, sir. They not only exchange final goods but also exchange the in some raw materials also, sir. Like, and also some services also, and some in technology they might be exchanging work in progress, or they may be collaborating together. So this option B is false. Next, no government intervention. False. When it is international nature, there will definitely be a government intervention, sir. Next, only between neighboring countries. International trade can also happen with all the other countries in the world, so not only specifically between the neighboring countries, but also outside, other than the neighboring countries. So, what is your correct answer? Option A is your correct
Option
answer.
A.
Next one, sir, the concept of comparative advantage. Sir, comparative advantage, what does it say? It says, sir, even though in both the products, a country is having the advantage in both the products compared to the other country, it will choose what is the product what it has most comparative advantage. Most comparative advantage means it will choose only the specialized product in that country, both the products. So here, option A, sir, all countries should be self-sufficient. No. Trade occurs based on relative efficiency.
Yes, sir.
And option C, only developed countries should trade. False. Specialization should be avoided. False. Specialization, based on specialization only we are talking about it, sir. Comparative advantage. So option D is false. So option B is your correct answer. It is occurs based on the relative efficiency of the products. Next one, sir, voluntary export restraints. VER. Sir, VER means, sir, VER means like these are some quotas. Like when the government will be imposing some quotas, sir. When the exporting countries like will be limited, sir. Sir means, sir, here what happens is due to the political pressure or economic pressure of the importing country, domestic country, the person who is exporting it to our country will reduce the exports, will reduce the like what are the quantity he is exporting to us. That is nothing but your voluntary export restraint. Now come to options, sir. Mandatory quotas imposed by importing countries. Option B. Informal quotas agreed voluntarily by the exporting countries. Option C. Tariffs imposed by exporting countries. False. Subsidies on exports. False. What is the correct answer, sir? Option B. Informal quotas agreed voluntarily by the exporting countries. Any doubt, sir? This, can I continue?
Yes, sir.
Yes, sir.
Sir, next one, ad valorem tariff. Sir, ad valorem tariff means, sir, we have two types, sir. Specific tariff, ad valorem tariff. Specific tariff means what we'll do, sir? We'll levy a fixed amount per physical unit. Here, ad valorem tariff means amount. We'll be charging the percentage. Will be charging the percentage. Now here what they are saying, sir, a fixed monetary per physical unit. This is nothing but your specific tariff. A constant percentage of monetary value of imported goods. This is nothing but your ad valorem tariff. We'll see other options also, sir. a progressive rate based on the quantity. This is nothing but your progressive taxation. This is nothing but progressive tariff. All a uniform tax on all goods. False. Ad valorem tariff is nothing but a constant percentage of the monetary value of imported goods. Understood? Yeah. Next one, sir. They're asking about new economic policy. New economic policy, sir. New economic policy, 1991 policy, sir. Liberalization, privatization, globalization. Now, removal of licensing requirements, liberalization of foreign investment, reduction in import restrictions, all of the above. Sir, now if you see removal of licensing requirements is nothing but part of your liberalization, sir. Liberalization of foreign investments is nothing but also part of your liberalization scheme. Reduction in import restrictions. This is also liberalization. Means what here? Nothing, sir. What our options are given is they're trying to reduce the restrictions, sir. They're trying to reduce the restrictions. They are trying to liberalize the activities, the task that you need to perform to undertake the activity. It is nothing but your liberalization in your LPG policy. So what is your correct answer? 35 D is your correct answer. It includes all. Sir, next one, sir, the effective exchange rate. Effective exchange rate means, sir, effective exchange rate means it is the weighted average of bilateral exchange rates, sir, based on the trade shares with different countries. Nothing, sir. This is a weighted average, sir. How will you calculate? How are you calculating your weighted average mean in your statistics? Similarly, we'll calculate the exchange rate based on the multiple trading partners. That is nothing but your using the weighted average. If you use weighted average of exchange rate, it is nothing but your effective exchange rate. Option B is your correct answer. Sir, next question. An exchange rate appreciates when? Sir,
Sir,
currency. Sorry. Any doubt?
no, sir.
Sir, exchange rate appreciates when? Sir, exchange rate appreciate means they are talking about the currency appreciation. Sir, when currency appreciates, sir, when domestic currency becomes cheaper, will our value of the currency increase or decrease, sir?
Decrease, sir.
When our domestic currency becomes more valuable, our value of currency decrease or increase, sir?
Increase.
It will increase. So option next, imports increase, exports decrease. This- Sir, generally there it is a vague point, sir. Here option C and option D are your vague points. So option B is most suitable here, sir. Option B is the correct answer. When domestic currency becomes more valuable, our currency exchange rate will also appreciates. 38th we have covered. Next one, sir. Money serves all of the following factors, following functions except. Sir, money means it is a medium of exchange, store of value, and unit of account. Options. What is the odd one out, sir? Here, means of production. So option C is your correct answer. It is not a means of production, sir. Money means a medium of exchange. To qualify something as a money, it should be acting as a medium of exchange, store of value, and unit of account. And it should be having a standard of deferred payment. These are the key functions of the money, sir. To qualify something as a money, it should satisfy all these four functions. But here means of production, it is not odd one out, sir. So option C is your correct answer. Now same, sir. Now this one, sir. M3 broad money includes. Sir, M3 money includes
Sir, currency plus demand deposit plus time deposit.
currency plus demand
Yes, sir.
deposits plus time deposits. Correct. Sir, now tell me, sir, what are the other options differ? What are the other options saying also? Now, first one, sir, currency with public only. What does it mean, sir? Sir, currency with public. Only they are talking about the currency with public. Sir, what is M1? How will you calculate M1, sir? M1 is nothing but currency with public plus demand deposits with banking system. Now, M2 money, how will you calculate? M1 money plus savings deposit of the post office savings bank account. M3 means total, including M1 plus time deposits with banking system. Now here, sir, means here what we need to consider currency plus demand deposits plus time deposits. Sir, currency plus demand deposits. Currency plus demand deposit means nothing but your M1 money supply, sir. M1 money supply. Here only currency with public deposits and only bank deposits. These are the components of your M1 supply and M2 supplies. So you option C is your correct answer. Next one,
Yes,
41, sir.
sir.
Which of the following is the source of government revenue? Sir, what government revenue, sir? Tax revenue and non-tax revenue. Sir, borrowings only. This is not a part of revenue, sir. That they are taking it to just finance their deficit.
Yes, sir.
And option C, deficit financing only. No, public debt only. These are all debts, sir. They are asking about the revenues. So option A is your correct answer.
Yes,
Next one,
sir.
balance of payment includes
Current account and capital
current
account.
account
And
and
capital
capital
account.
accounts. Sir, we should take both current account and capital account. Not next one, sir. Crowding out effect in fiscal policy occurs when. Sir, crowding out effect means first. What do you mean by crowding out effect? Sir, crowding of effect means, sir, now if the government is borrowing when the government borrows more and more money, automatically interest rates in the like sorry, sir, when the government is raising the interest rates in the economy, what will happen, sir? When the interest rates are high, the money supply cost of loans increases. Cost of loans increases automatically. What will happen, sir? Cost of raising the capital will also increase. Sir, if the cost of raising capital is increasing, automatically what will happen, sir? the There will be less stimulus to the fiscal policy. Am I right? The people will not tend to take the capital and invest and do the business, sir. Am I right?
Yes, sir.
That is nothing but your crowding out effect. Now come to options, sir. In options, what they are saying, government spending increases the investment falls. Option B. Option C, sir. Private sector expands rapidly. Sir, if the interest rates are increasing, cost of loan is increasing, will they try to increase the business, expand the business, or like will they continue with the normal? Will they go for the expansion, sir? Will they go for loans?
No, sir.
So this option C is also false. Interest rate false. Option B is your correct answer, sir. Government borrowings reduce the private investments. Next one, sir. 44. W. Adam Smith's theory of absolute advantage. Same, sir. Previously they have asked about comparative advantage. Now they are asking about the absolute advantage. Sir, in theory of absolute advantage, what we have learned, sir, which country having the specialized advantage, which country is specialized in what good, the country should produce and export only that type of goods, specialized goods. So now come to option, sir. What there's all countries should produce all goods. False. If this is the case, then there will be no international trade. Option of international trade. Option B. A country should specialize in goods which they have absolute cost advantage. True. Option C. Trade is always unfavorable for developing countries. False. There may be scenario where sir, in theory of absolute advantage, the assumption is that one country will be specialized in one good and other country will be specialized in other goods. Means it may the countries the parties involving might be a developing country, both developing countries, developing, countries also, or both developed also. So this is not false, sir. This is false. This is not correct. Next one, countries should never specialize. False. The entire assumptions will go wrong. So option B is your correct answer. Next one, sir, the policy rate is set by. Who will set the policy rate, sir? Base rate or repo rate. Policy rate here refers to the base rate or repo rate. Repo rate mean, sir, easy understanding. Base rate or repo rate. Sir, repo rate, this is all dealing with the monetary liquidity adjustment facility. Means dealing with the general deals with the banks. So every decision taken by the banks is dealt by the RBI. So answer is RBI. Not central government, not commercial bank, not state government. Next one, sir. Velocity of money refers to. Sir, velocity of money refers to how fast the money is changing from is moving from hand to hand. That is nothing but the speed at which money circulates in the economy. That is nothing but your velocity. Velocity means nothing but your speed, sir. Any doubts?
No, sir.
Next one, ENAM, Electronic National Agriculture Market. What they are asking, sir, is what do you mean by ENAM? But now, first one, sir, a government in a trading organization, an electronic trading portal for agricultural commodities, an export promotion scheme, a banking service for farmers. Sir, ENAM is a sir ENAM is a unified national portal, sir, where the where the agricultural commodities are sold by the farmers electronically, sir, by the APMCs, improving the price discoveries. So it is an electronic trading portal, sir. It is not a government trading organization. It is an electronic trading portal where the farmers will be able to sell their produce directly to the APMCs, like directly to the government, sir. They can sell directly in the online. Not only to the government, sir, like anyone can, like similar to your Amazon and Flipkart. The enam works similarly, sir. The farmers will come, list their agricultural products and then sell them. Next one, sir, progressive taxation means. Sir, option A, everyone is paying the same tax. That is, then it is not called progressive taxation, sir. It is called slab. It is flat rates. It is called flat rate. So option A is wrong. Tax rate increases with the income level. Uh, income increases, tax also increases. No, next one, option C, tax decreases with income level. False. Option D, only low income group pay taxes. False. If the income increases, they need to pay more tax. That is called nothing but your progressive taxation. Option B is the correct answer. 14 we've already covered. Next one says the circular flow of income demonstrates. So circular flow of
Real flow and of
the real flow of
factors and money flows between household and firms.
it shows both the flow of factors and money flows. Both factor it shows both flow of factors and money flow between the households and income. Your option A, they are saying only the monetary transactions, sir. Your option B, C, they are telling between the countries. They are telling that too only capital. Option D, they are telling only the circular motion of money in the households. So they are not considering the other factor like flow of factors in or any other option. So option B is correct answer. Next one, which sector contributes the largest share to India's GVA? Which sector, sir?
Service sector.
Service sector is the
Service sector.
large contributor of your GVA. The service sector contributes how much percentage? It contributes around 50 percentage of your total GVA, and industrial sector it contributes around 25 percentage. Agricultural sector it contributes around the 15 percentage, 15 to 18 percentage. That is the share of contribution of each sector. Next one, stagflation. Sir, stagflation means high unemployment and high inflation. When there is both high unemployment and high inflation, such a situation is called stagflation. High inflation with high unemployment. So here 53. India's pre-independence economy under British rule experienced. Sir, any industrialization happened during that period? Any industrialization happened? Yeah, there was no industrialization. There was no major rapid industrialization, sir, during the pre-independence area, and there is no increase in per capita income, and there are no major technological advancements. What happens? Sir, there was stagnation of industry, and the focus is on raw material production. They tried to loot India, sir. They tried to transfer all. They tried to produce all the raw materials in India, export it to the Britain, and then convert it into finished goods, and then again sell it, import it to the India and sell and take the all the wealth of India. That is what happened. Option B is your correct answer. 54 we have covered already. Next, current account deficit. Same. Sir, current account deficit means. Sir, current account deficit means imports are greater than.
Import exceed.
Yes, imports are greater than exports. Sir, if exports are greater than imports, it is called surplus. If exports are equal to imports, it is called balanced trade. Next one, market failure occurs when. Sir, if market is allocating resources efficiently, will it fail?
No, sir.
Next one, government spending increases. Sir, when the government spending increases, will market fail, sir?
No, sir.
No. And prices of goods tend to fall. It is a part of the market. Price of goods tend to fall. So, when private market fails to allocate the resources efficiently, then automatically market failure will occur. Understood? Sir,
Yes,
appreciation of
sir.
currency, same sir, same question there. They have asked about appreciation. Here they are asking about depreciation. Nothing much to discuss there. Next one, which of the following is a potential cost of FDI? Sir, FDIs, what are the demerits of FDI? Outflow of profits to foreign countries, environmental degradation. They'll try to exploit all the resources in the domestic country, host country. And next one, option C, loss of local cultural identity. They'll try to influence the influence the culture, sir. There will be when we are engaging in the international trade, there will be new culture entering into our country, sir. Automatically there will be identifying, like there will be issues with the cultural identity, sir. And also when the outside people are coming and investing, they have like most probably they'll have more technology, which will be importing it to our country also, which will automatically be affecting our local industries. For example, textiles, sir. Generally in India, textiles means we'll use handmade sarees, sir. Handmade sarees or handmade textiles. But later, after globalization or after industrialization, what happened? New machines came. The technology we have imported, we have developed new technology. Automatically, what happened, sir? The handmade sarees, handmade industries were lost. The loss of local cultural identity. So, what is the correct answer? Option D, all of the above. Next question, sir. 59. Which of the following is not a method of calculating national income? Sir, how many methods we have calculating of national income? Three methods. What are the three methods?
Income method, product method, expenditure method.
So option D is the valuation method. There is no such method called valuation method, sir. Option D is your correct answer. Sir, budget surplus revenue exceeds the expenditure. CRR. Sir, now CRR, cash reserve ratio. Sir, cash reserve ratio means what do you mean by cash reserve ratio? what do you mean by cash reserve ratio? The cash reserve ratio is nothing but the percentage of money that the banks need to keep as in cash or in the liquid instruments as prescribed by the RBI out of its total deposits. So if the cash reserve ratio is increased automatically, what will happen, sir? Will it increase the money supply, decrease the money will it will increase the money with the banks to lend or decrease the money with banks to lend?
A decrease.
So if the banks having less money to lend it out to give it out for loans, automatically what will happen? There will be less decrease in money supply in the economy. So option B is your correct answer. Next one, repo rate transaction involves. So repo rate means the rate at which banks borrow from the RBI. Now, how will the banks borrow, sir? By pledging the securities. So, same, sir. Lending funds against the securities. Option C. Sir, 1 minute, sir. Sir, repo rate transaction involves selling the securities with an agreement to repurchase at a future date. They'll not pledge it, sir. They'll sell the securities with an agreement to repurchase at a future date. This is what happens when the banks are borrowing it from the RBI. Option A is your correct answer. 63. The Finance Commission in India is responsible for, sir, implementation of monetary policy. It is dealt by whom, sir? It is dealt by the RBI. So option A is wrong. Next, option C, controlling foreign exchange. False. RBI deals with it will be dealt by the RBI. Regulating banking sector, RBI. Now, what is the left option, sir? Option B, recommending distribution of taxes between unions and states. Finance Commission. Next one, sir. Gross domestic product measures. Sir, gross domestic product, GDP, sir. How will you calculate GDP? Same question, sir. GBR, GDP
Sir,
at
final
constant
goods and services during within the period.
in the given period. Next, liberalization began in what year? First wave of liberalization began in what year? During the 1980s, sir. First wave began in 1980s. Next one, says specific tariff means will charge per unit of imported goods, that is called specific tariff. If we are doing it on a percentage basis, that is a ad valorem tariff. Prohibition on imports, it is nothing but your ban. You are banning directly, you are banning them. Next, tariff applied only to specific countries. It is not specific tariff, sir.
Yes, sir.
Next, disinvestment policy involves. Sir, disinvestment policy involves what they are talking about now. Come, sir, what do you mean by disinvestment? Disinvestment means selling of your stake in the company. That is nothing but your disinvestment. Means you are selling it, sir. Now, disinvestment policy, it was introduced like it came into role because many of the public sector undertakings were loss making, sir. They are not being held responsible. No one is looking them, and no one is making them work efficiently. So what the government has brought, sir, they thought of privatizing them so that the people they'll start making some profits. They'll start working efficiently. So now come here, sir. Option A, what is your option A here? Government purchase of private companies. Sir, if government is purchasing private companies, is it investment or disinvestment? Sir, government purchase of private
Sir,
companies, it is investment. So
invest.
next one, sir, restriction on foreign investment. Sir, it is nowhere related to this point. Next one, option D, increase in government expenditure. If government expenditure is increasing, it is not disinvestment, sir. It is of encouraging. It is kind of like you are still continuing with your loss making thing. It is not disinvestment. So option B, sale of government shareholding in public sector enterprises. Nothing but your disinvestment policy. Next one, sir, regional trade agreements means. Regional trade agreements means people of surrounding countries come together and enter into a common agreement called regional trade agreement. There might be economic unions, they might be free trade areas or custom unions and common markets. These are all your regional trade agreements, sir. Forms of your regional trade agreements. Option D is your correct answer. Next one, sir, statutory liquidity ratio. What do you mean by SLR? Sir, statutory liquidity ratio means the percentage of the net demand. Sir, what are the net demand liabilities and total net demand and time liabilities, whatever are there on that, the percentage of amount they need to maintain in gold, government securities or cash reserves, sir. It is determined by the RBI. So nothing but maintaining a certain percentage of deposits as liquid assets. This is nothing but your SLR. Sir, understood?
Yes, sir.
Sir, CRR means amount to be held in the cash, sir. Percentage of amount to be held in cash. SLR means percentage to be held as a liquid assets. That is the key difference, sir. CRR and SLR. Next, export subsidies and incentives includes. Sir, if there are tariffs on imports, is there an export subsidy, sir?
No, sir.
It is not an export
Import
subsidy.
subsidy.
Uh, what, madam?
Nothing.
The tariffs on imports is a actions, a control action taken by the government to reduce the imports. It is not an subsidy. It is a measure, sir, taken by the government. Next one, option B, grants, loans, and prices support to the domestic producers. Yes, by this they can reduce the cost, so it is kind of a subsidy to the people, incentive. Next, restrictions on foreign investment, false. Controls on forex, false. So what is the correct answer, sir? Option B. Sir, export subsidies means any direct grants to the exporters, tax exemptions, concessional loans, price support, and any other financial incentive that makes them, like, that makes those goods cheaper, sir, like competitive, or like that makes the goods compete internationally. Then we can call them as export subsidies and incentives. Option B is your correct answer. Expansion of fiscal policy we have completed. Personal disposable income is done. Major benefit of FDI to the host country includes everything, sir. If FDI is there, capital inflow will be there, technology transfer will be there, employment, new investments attracts more employment. For if the foreign people are coming and investing, they'll give their foreign currency and they'll purchase the home currency, which will increase our foreign currency earnings and development of local industries. Automatically, if the one come industry came, automatically the industrial area, the surrounding also new industries will start, and local industries will also thrive because of it, sir. And it will increase the living the standard. So option D, all of the above is your correct answer. Next one, sir, industrial policy resolution 1948 aimed at. Sir, is my voice audible? Sir, is my voice audible?
Yes, sir.
Sir, this one, sir. Next one, sir. Industrial Policy Resolution 1948 aimed at. Sir, now Industrial Policy 1948, sir. What now? Here, what are the options they have given, sir? Complete privatization of industry, expanded role for public sector and licensing to private sector, emphasis on free market, elimination of monopolies. Sir, in 1948, this scheme, sir, what are the IPR, Industry Policy Resolution? It is aimed at a mixed economy model. So the main aim is to promote the mixed economy model, like for both, like expanded role for public sectors in basic industries and licensing for the private sector and government regulations of the economic activity. So like there in this, in the IPR 1948, the government has, like, they wanted to have a mixed economy role. So complete privatization is false, it is only private part, like private only, they are talking about the private sector, so this is false. Emphasis on free market, same, private sector. Elimination of monopolies, false. Option B, sir, expand role for the public sectors and licensing to the private sector. Next one, sir, production linked incentive scheme aims to. Sir, production linked incentive means, like if they are, like, it is an incremental incentive based on the production, sir, based on the production and sales, sir. Like if you government has introduced this scheme, generally it was actually launched in 2020, sir. It was launched in 2020. What does this scheme is, they have specified, like, for some goods what are they producing. If you produce over and above this quantity, we will provide some we will provide some incentive to it, or we will provide some benefit to you, like giving some financial incentive, like some cash, or some reducing or helping in reducing the cost or reducing the tax or something. They are giving, sir, they are helping the entity. It is nothing but production linked incentive, sir. It is a scheme introduced by the government in 2020. It is aimed to encourage the domestic manufacturing and exports. Option B. Any doubts, sir? Sir, any doubts? Can I continue? Sir, shall we continue? Fast, sir. I want
Yes, sir.
two more questions to close that. Next one, sir. According to Article 280 of the Indian Constitution, the Finance Commission recommends. Now, sir, 280, in this Article 280, sir, it mandates the Finance Commission to recommend the distribution of net tax proceeds between the union and state. And like, sir, here what generally they are doing is, like, it asks the Finance Commission to, like, tax distribution, sir, how to do the tax distribution between the union and states, and grants in aids to the states, how, or like how, what are the aids to be provided to the states. These are all, like, these are all, like, stated in the Article 280, sir. Option B, tax distribution between union and state and grants in aids to the state. David Ricardo theory of comparative advantage. Sir, here, sir, David Ricardo theory, sir. Ricardo has considered same, sir, comparative advantage. Uh, Same here. What he told is, instead of taking directly the comparison, relative benefit, relative efficiency, take the opportunity cost. That is what he told in his theory of comparative advantage. Based on the opportunity cost of producing the product between the two countries, take those goods. So, what he is saying, sir, countries should specialize. Option A, a country should produce only those goods in which it has absolute advantage. No, it is a theory of absolute advantage. It is a zero sum game, false. Next is option B. Country should specialize in goods where there is absolute disadvantage is smallest. Next, sir, option C. Specialization based on comparative advantage always benefits the both countries. Option C is correct answer, sir. Here they are talking about the cost part. Specialization based on comparative advantage always benefits the both countries. This is nothing but theory of comparative advantage as per David Ricardo. Next one, sir. Information asymmetry in market leads to the same question, sir. Asymmetric information leads to adverse selection and market failure. Repeated question, sir. Next one, primary deficit equals to primary deficit. It is this we have already covered. Sir, M1 money. How will you calculate M1 money? Sir, how will you calculate M1 money? Sir, M1 money. Currency with public plus demand deposits. Sir, M1 money means the most liquid money, sir. What is the liquid total liquid money available in the in the circular flow in the economy? That is nothing but your M1 money, also called as narrow money. It is, how will you calculate, sir? Currency with the public plus demand deposits. Means we need to include all the currency in the saving, all the currency in the circulation and savings account, demand deposits, saving and current accounts. So option here, option C, option D, they are only talking about only one factor. So option A is correct answer. Sir, why not option B? Here, sir, all deposit mean deposits include this, uh, not only demand deposits, sir, but also the time deposits. So we should not, while calculating M1 money, we should not include those time deposits. So option A is your correct answer. Next one, sir. Foreign exchange market is where? Foreign exchange market is where?
Domestic currency is exchanged for foreign currency.
Domestic currency is exchanged for foreign currency. Sir, only central bank said false, sir. Anyone can trade. Stocks and bonds are traded. No, this is a stock market, not foreign exchange market. Import and export licenses are issued. Not at all related to this, sir. Option A is your correct answer. Next, green revolution in India was based on. Sir, green revolution based on high yielding varieties of seeds and scientific cultivation, sir. Option B is your correct answer. Not organic farming method, not export of agricultural products, land redistribution to government. Option B. The green revolution is considered high yielding varieties, sir. It is generally, it is like during the 1960s and 1970s introduced high yielding varieties of seeds, chemical fertilizers, pesticides, modern irrigation techniques, like which dramatically increased our agricultural productivity. It is the green revolution, sir. It has happened between 1960s and 1970s. FDI involves, sir, FDI involves long-term investment in productive assets. FDI involves long-term investment, sir, in productive assets with management control. FPI, short-term investments. Long-term investments is FDI. Next one, sir. Bretton Woods system was established for. Sir, what is this Bretton Woods system? Sir, it is established. Sir, what is this Bretton Woods? Sir, Bretton Woods 1944 established IMF and World Bank, created a system of fixed but adjustable exchange rates and pegged to US dollars, sir. Means here, what he did, sir, he established IMF and World Bank, and what he did, he created a system of fixed but adjustable exchange rate based on the pegged to the US dollars. Establishing international financial institutions. Next one, sir. Which function does government perform when it provides unemployment benefits? What function, sir? What function, sir?
Stabilization. Stabilization.
Stabilization, distribution or redistribution, allocation.
Stabilization.
Sir, not stabilization, sir. It is distribution or redistribution function. It is distribution function, sir. Not stabilization function. Sir, they are not. We are not concerned about the employment level here. They are asking about the unemployment benefits provided by the government. Means they are talking about the income, sir. They are talking about the income distribution. Nothing but your distribution function. Economies of scale occur when, sir, production cost increases. Economies or diseconomies, sir? The production cost increases. Is it economies or diseconomies?
Sir, diseconomy.
So this is not an answer. Outrightly, you can eliminate this. Next one. Firms are reducing their workforce. Sir, if they are reducing their workforce, means something it is indirectly referring to there is less demand for their product, or in they are having some troubles. If they are reducing their workforce automatically, like even though it means there is they are reducing to reduce the cost, sir, but ultimately it is also suggesting that there is some issue with the sales and product. So it is not economy, it is also not related here. And prices increases with production. If prices are increasing, then there is no point of, even though production increases, there will be no point of, like there will be no major effect on your profitability, sir. So automatically, this is also not correct. So answer is what, sir? Option B. Average cost per unit decreases as output increases. Cost is decreasing. Cost is decreasing as the output increases. Nothing but your profit. It means it is increasing the profit, sir. So option B is your correct answer. Sir, Niti Aayog replaced what, sir? Which was replaced by Niti Aayog?
Sir, Planning
Planning
Commission.
Commission of India was replaced by Niti Aayog. Sir, next one, sir. If MPC is equal to 0.8, we have calculated, sir, the income multiplier already. 1 by 1 minus MPC. 1 by 1 minus 0.8, you will get 1 by 0.2. It is nothing but your 5. Next one, sir. Which of the following is a public good? Sir, public good. Sir, automobiles. You need to pay, right, to get an automobile, or maybe bike or car, sir. Will you get it for free of cost, or you need to pay something to get?
We need to pay, sir.
We need to pay. Next one, sir. Education from private schools. You are getting for free of cost, for by paying something.
Paying
By paying
something, sir.
something.
Next one. National defense. You are getting for free of cost, or you are paying something.
Free of cost, sir.
Next one. Telecommunication services. You need to pay, or you are getting for free of cost.
We need to pay, sir.
Sir, out of which only the C option is you are getting free of cost, which is nothing but your public good. Sir,
Yes, sir.
these are all include cost included. So public goods means generally free of cost. Generally, it is common to all, and it is for free of cost. Next one, sir. A free trade area is characterized by, sir, free trade area. Complete elimination of tariffs between the member countries, common external tariffs against non-members, and no political integration. Option D, sir. All of the above. This is the definition of free trade agreement, sir. They have segregated this definition into 3 points, and they have given us options. Sir, in three sector economy, who will be there, sir, in the economy? Households, firms, and government expenditure. Government will be there. Now, aggregate expenditure is equal to
Consumption plus investment plus government.
consumption plus investment plus government expenditure. Option B is your correct answer. Sir, non-tariff measures. Out of which, what of the following are non-tariff measures, sir? Sir, import quotas, non-tariff measure, not a non-tariff measure. Sir, import quotas, non-tariff measure, tariff measure.
Tariff measures, sir.
So tariff measure, sir.
It is a what, sir?
Mm,
Tariff measures, sir.
Sir, I'll ask you something, sir. Tariff measure means we are imposing some restriction of tax rate should be there. Sir, in import quotas, are you are restricting, you are having a restriction on the quantity, or you are restricting the tax, you are imposing tax, sir? Sir, import quotas, we are restricting the quantity, sir. How much he can import, we are restricting only the quantity here. We are not having any tax part over here. We are not levying any tax part is not discussed here. That is import quotas. It is a non-tariff measure. Next one, technical standards, sanitary measures, phytosanitary measures. These are nothing but your technical standards. Next, rule of origin. These are nothing but your non-technical measures. the exchange rate is, sir, the exchange rate is at, so this is not part of tariff, non-tariff measure, sir. This is somewhat not related here. So option C, find the odd one out, sir. Option C is your odd one out here. Next one, 94. MRTP Act 1916 was designed to, for what, sir? Sir, MRTP Act is designed to prevent concentration of economic power, sir. Concentration of economic power. So previously, what used to happen is many big companies used to come together, form a one company. They used to come together and form, like, the big companies used to acquire all the small companies and they try to become a monopoly. If they become monopoly, automatically there will be exploitation of public, consumer exploitation will happen. So what government did is, the government has introduced MRTP Act 1969 to promote, to prevent this concentration of economic power, to restrict the to restrict to restrict the monopolies, to restrict the acquisitions. So option B is your correct answer. Next one, sir. International Monetary Fund primarily focus on, what is the main feature of IMF, sir? To promote international monetary cooperation, assist countries in balance of payments, and manage the exchange rate stability and economic policies. Now, what are they, sir? Regulating international trade. False. It is done by the WTO, sir. So option A is false. Next one. Option C. Come to option C, sir. Investing in developing countries. No, sir. It will. It is not. It is not investing. It only provides assistance, sir. Controlling forex markets. It is not directly dealing with the forex market, sir. One of the functions, sir, but the main function of international monetary fund is to provide loans and promoting international monetary cooperation. Option B is the correct answer. Next one, sir. Which tax is levied by the state government in India, sir? Out of which, what are the state government taxes, sir? Sir, income tax, state or central?
Central, sir.
Corporation tax, state or central?
Central.
Stamp duties and property taxes, state or central?
Sir, state.
Customs duty, state or central?
Central.
Central. Sir, correct, sir. Option C is correct answer. Next one, sir. Fiscal federalism in India refers to. Sir, fiscal federalism means it involves diverse of revenue raising powers, expenditure responsibilities, and transfer mechanisms, sir, between union and trade government. Means, sir, fiscal federalism means we'll have both central and state government operating together, and and there will be, like, like, division of resources, sir. So, like, every function will like, there will be division of power between the state and central, and come both jointly together running the country is nothing but your fiscal federalism model. So option A, division of political power between the union and states. Option B, division of economic functions and resources between different government levels. Cooperation between finance ministries. Option D, central control of all finances. Sir, option D, they are only talking about the central control. False. Cooperation between the finance ministries. False. They are only talking about the finance part. False. Now come to option A and option B, sir. Option A and option B looks same, sir. Similar to it. Similar to you. But correct answer is option B, sir. Correct answer is option B. Why, sir? Sir, here they are only talking about the political power between the union and state, sir. Not only political power, sir. There is a division of economic functions, resources also. So option B is correct. Next one, inflation is measured by. Sir, inflation. How will you measure, sir? Inflation. Sir, inflation is measured by all the above, sir. Consumer price index, wholesale price index, and GDP deflator. By using, sir, GDP deflator, will use it for calculation of inflation between the 2 years. If you remember, we have done that in class also, sir. Wholesale price index, sir. Consumer price index, wholesale price index are nothing but they here they will be have will be plotting the prices of various years, and we'll calculate, sir. If the prices are more, we'll check whether what is the reason, whether, so we'll understand what is the reasons, and we'll find out what how much the prices have been increased. What is the inflation cost? So inflation is measured using all these three. Option D is correct. Next one, sir. According to Keynes, equilibrium level of income occurs when
Aggregate demand equals to aggregate supply.
aggregate demand equals to aggregate supply. AD is equal, demand is equal to supply. That is nothing but your equilibrium level of income. Next one, sir. Anti-dumping duties are imposed to. Sir, when will you use anti-dumping duties?
Sir,
Sir, when the foreign company is dumping, is intentionally selling at a low price, even though they are making losses, but are still are intentionally selling at a low price. Then, to protect the domestic companies, the government will levy a tariff called anti-dumping duties. What they'll do, sir, they'll levy something called anti-dumping duties. So it is nothing but to protect domestic industries from unfairly low priced foreign goods. Understood, sir?
Yes, sir.
Sir, any doubts in your question paper? Anywhere in your suggested answer you need anything? You need any help in understanding any suggested answer? You are having any issues, sir, in the question paper?
no, sir.
Sir, how many of you have followed the plan we have given, sir? How many of you have followed it? How many of you followed, sir? Sir, first, is that plan is okay with you, sir? Are you able to follow that plan, or how many of you are like able to follow at least complete that 70% of the target of the plan? Sir, respond. Sir, any difficulty in following the plan? Are you able to? Is there any difficulty in following that plan?
No, sir.
Sir, and one more thing, I already told you last time also. When you are doing your OMR, no name should be there unless only your signature and invigilator signature should be there. No other thing should be there. You should only bubble your admission number in the OMR sheet. So many people I have seen, many people are writing their name. I told them last also, but still they are doing the same thing, sir. Sir, why I am particularly saying is, in internal exams, if you are writing it, if you are writing your name and you are following it, what will happen? You know, when you are appearing for your final CA foundation exam, like final exam, main exam, what will happen is you will like you mistakenly write your name on that paper, sir. Automatically, you will be disqualified. The paper will not be taken for evaluation, sir. So try to avoid that mistake from here itself. Okay, sir. Any doubts? Want to discuss any particular topic where you felt any difficulty? Okay, sir. Then we'll meet in the next class. Just a minute. I'll take the attendance. Shreyas, just note down who are all there in the meeting, and then just forward it in the group. Sir,
Okay, sir. Noted, sir.
noted. Okay.
Yes, sir.
Okay. Okay, sir. We can leave for now. We can close the end the session.
5, sir.
Yes, sir.